Hello, hello, hello. Good Sunday, everyone. How are we all doing? Okay. Denisha, hello. Happy Sunday. Momentum Trader, what's up, my man? David, what's up? All right, everyone. Hello. Looking forward to another great week ahead of us. Last week was interesting price action, pretty much seek and destroy on a hourly, daily chart. Really aimless, choppy price action. And we'll get more into that and what I'm expecting this week. So with that being said, let's just cover a few things and what I'll be going into this session. So doing the usual intermarket top-down analysis, what I'll be expecting for this week on an array of assets so that we can have a 3D vision of the markets so that we can be in line with institutional order flow, and intermarket analysis is what makes what we do here superior to most technical analysis methods. So with that being said, I'll also be covering macros, how I use them in my analysis, my live trading, and I also have a live example to go over here with you guys. So with that being said, let's get right into the charts and what I'm expecting for this week. All right, so starting here on a weekly chart for the dollar index, small range week. Last week didn't really do anything, just stayed in between a range on the daily, just pretty much consolidated inside of a daily fair value gap. So with that said, same bias as last week. I'm sticking to my guns here. I am expecting risk on to continue. With that being said, I'll give you guys specific things I'll be looking for going into this week to qualify or negate my bias. So first thing our eyes jump to on this chart are the relative equal lows. One of the reasons that we consolidated was looking at the economic calendar, and then how could we have determined intra-week that we were likely to remain in consolidation? Looking at the new week opening gap for the dollar index, the S&P, Forex markets, you'll see we consolidated around that gap and we were not able to accelerate or expand away from it. So what does that mean? If you're a higher time frame trader, higher than a 5-15 minute, more than likely sat on your hands, not really much to do there. This is pretty much a scalping environment, quick in and out surgical strikes, and you really have to be careful about picking your shots. So that's a way you can anticipate and have your analysis call for a consolidation week using the economic calendar in conjunction with the technicals. One of the interesting things I think about this consolidation is that it allowed much more sell-side liquidity to engineer below here, because now uninformed speculators are likely going to trust this as some sort of support or bottoming out formation. And for us, that's a bullseye that we're going to look to attack into this coming week. So with that being said, on a weekly chart, I am expecting well, first let me get into last week's price action and some things I think were notable. So looking here at this wick above market price, we were unable to trade up to the 50%. So the 50% is the 102,451 level, right about here, and price was unable to rally to that. So that indicates weakness going into this week for dollar index. So I will expect an expansion lower as long as we remain below the consequent encroachment of that wick on a weekly basis. Some targets I have for this week, assuming we show bearish order flow, and then I'll cover more in detail on a daily chart. First target, consequent encroachment, 50% of this wick. Then we have the relative equal lows here. And assuming we expand aggressively through those lows, my next downside objective will be this inefficiency here on a weekly chart at the 99 level. So I will expect lower delivery into this week as long as we remain below key levels that I will now go into on a daily chart. So let's have some context for what we'll be looking for here. We're seeing bearish order flow, premium arrays respected, continuously seeking discount. So let's look at the daily chart a little more zoomed in. So order block, trade into it, propulsion block, rejected it, fair value gap, trade below it, up close candles, trade into it, volume imbalance, beautiful rejection here, seeking our discount levels that we've been anticipating. So what did we do last week? Nothing really notable. We opened here on Monday and we pretty much just banged around inside this range, staying inside this fair value gap. So as I highlighted to you all last week, bearish order flow would remain valid for me as long as we remain below this bearish order block, more specifically the mean threshold on a closing basis. So as long as we remain below that, I will expect continued downside. What would negate my bearish bias on dollar is if we get some sort of displacement and then we take out this swing high. I won't need the swing high taken out. If we trade to and through the consequent encroachment of this gap, then I will have to reassess my bias and my analysis and just simply get in line with what the market's showing. I am favoring lower prices. We want to avoid calling tops and bottoms. We have relative equal lows. This consolidation here allowed a lot of sell side to build up under these lows. So I think that's going to be the bullseye for this week. Also looking at this purple box in here, which is our volume imbalance, I would want to see price close below it and expand aggressively through it. What I would be okay with going into this week is taking out these relative equal highs here, and I'll show that a little more clearly on a daily chart. But as I said, below the order block and this fair value gap acting as resistance, I will expect lower prices on dollar and risk on in the markets. So now for some downside objectives. The first one will be the sell side liquidity here. Objective number 2 will be this sell side below here. Get a horizontal ray. Sell side at the 99.8 level would be my second objective. Third objective, this sell side here at the 99.5. And then assuming we accelerate below those levels, we do have an inefficiency here that I would expect to be delivered to. But all these levels here are contingent upon how we trade below these lows. Do we trade below it and immediately reject it? Or do we trade through it and accelerate aggressively on the downside? That will determine what I will anticipate in terms of our downside objectives. So that's why we give multiple targets. So for our swing traders, so that you're able to partial out of positions. Obviously, keeping in mind none of this is financial advice. I'm just sharing what I'm seeing on the charts and what I'm anticipating moving forward. If you incur risk, that's all up to you. But for a swing trading model, this allows multiple profit objectives. So you don't even need the final objective to be reached for it to be a profitable transaction. So as I said, how we trade below these lows will indicate how deep of a discount we go into. But these are my 4 discount objectives that I will look for into the coming week. So now let's drop into an hourly chart. So this is last week's range. Opened here on Sunday, pretty much banged around inside this range, didn't really do anything. So what dealing range are we trading in from high to low? We've just pretty much consolidated around equilibrium. So how can you anticipate a consolidation week? If we are unable to accelerate away from equilibrium, which is what we would want to see in an expansion model, and we just consolidate around it, this makes it real low probability, because how do you decide to be a buyer or a seller when we're consolidating around equilibrium, showing no real respect for premium or discount arrays? So with all this in mind, we saw a sideways week. So going into next week, what will I be expecting? So as I said, this is the parent dealing range we're trading in. This line here is our sell side liquidity on the daily chart, the relative equal lows. So going into this week, if we are to be bearish, I would not want to see this high here taken out. Why is that? This is that daily swing high, which is also a bearish order block. If this high is taken out aggressively, then I will reassess and get in line with what the market's showing us. However, we are showing bearish order flow. We're bearish top down. So I will favor lower prices this week. So we do have relative equal highs here. And these are too clean to be left alone, in my opinion. So if we are to continue lower, I would expect something like this. Take out the high and then dive lower into our discount objectives. Reason being, breakout traders, they usually will manipulate them, take them off sides, and then back to our power of 3 concept. If we open around where we close, so barring any extreme opening to the upside or to the downside, we should open around where we closed, and then we would expect some sort of power of 3 manipulation move higher above the buy side to get reactionary traders off sides. And then we should see some sort of displacement, return to fair value gap, order block breaker to then deliver us into our lower objectives. So that's what I'll be looking for this week on a dollar. So as I've said, risk on is what I will be anticipating. And then if we do see lower prices, then I would expect these premium arrays to act as resistance. So once we take out these highs, I'd want to see us get under these two black lines, which are the daily fair value gap, potentially bump that as resistance, and then continue lower. So that's what I'll be looking for going into this week. So going into the bond market. So we did have targets hit last week for bonds, a little bit of movement, not much. So as I've highlighted, we had this fair value gap in here that we took out buy side, traded below it, bodies respecting it. This indicated to me we were in a sell program. Sell program, premium arrays respected, and continuously seeking discount. So I took everyone's attention to these relative equal lows here. We did not reach this low, but we did trade down to this sell side here. And then after we hit that sell side, we pretty much consolidated in this range. So I will expect lower prices on bonds to take out the sell side, but I am leery about holding a firm bearish bias. So since my analysis right now is calling for 50-50, I will need to demand more information. So I am favoring these relative equal lows being taken out. However, that's not much range to work with. So once we take out these lows, I'll want to see, do we accelerate lower into this fair value gap? Or do we trade down into the sell side and then reject it immediately? So that's what I'll be looking for on bonds. And the nice thing about looking at bonds is it gives you a 3D vision on the market overall, and it gives you even further insight into what we would expect on the dollar index. So those are some things I will be looking for into this week. Looking at the interest rates themselves, we are seeing bearish or bullish order flow. Looking at the 10-year yield, we did take out these lows. Notable SMT between the 10-year and 30-year yield. The 30-year failed to take out these lows, and then we've displaced higher, and then we found support inside of this volume imbalance and bullish breaker. So I will be interested to see, do we expand higher this week and take out these relative equal highs, which I am favoring given the SMT, sell side being taken, and note the lack of displacement on the downside. So we took out these lows, but did we displace through them aggressively and expand? We did not. We just swept them and then we immediately rejected them. So the displacement is on the upside, the SMT, and we are finding support in discount levels. So that would support the T-bonds delivering lower into this sell side. How we trade there, I'll then monitor going into this week to then have a better idea of risk on, risk off going into the following trading week. So now going into the S&P. Let's go up to a weekly chart and let's look at the continuous contract. So we have this data in here. So looking at the weekly, we are seeing bullish order flow and we have these relative equal highs here. So that is my draw on liquidity and what I am expecting to be delivered. So the only reason I wanted to refer to the continuous contract is so that we could look at these relative equal highs. So now back to the June delivery contract. This is that buy side liquidity here that I am anticipating to be delivered. So this is my higher time frame draw on liquidity on a weekly chart. So we didn't really do much last week, pretty much consolidated on a daily chart. Something that is notable here though is this volume imbalance. And let's really zoom into this price action here. So the volume imbalance, the separation between the bodies here. Now let's measure consequent encroachment, 41.3550. And then let's look at the low of the week last week right here. The low is 41.35.25. So we delivered it to the tick. So let's mark out that level. So what's interesting about that is the reaction that we had off that key level. So the fact that we traded down into it and then traded higher off that is indicating bullish order flow to me. The fact that we did not accelerate below it or get a closure below it is indicating higher prices for dollar or S&P as long as dollar remains bearish. So the reason it went one tick below it is because traders that are looking at the market through this perspective, the bid and the ask. So if the consequent encroachment is 41.3550, those orders wouldn't fill unless we delivered one tick below it. So there's the algorithmic precision that we would anticipate. So on the weekly chart, for me to remain bullish, we should remain above this volume imbalance, and we should expand this week. We have had 3 lethargic weeks that were pretty much consolidation. Yes, they were bullish because we took out each previous week's high, but it didn't give us much range to work with. So given that we've had 3 consolidation weeks for the most part, and looking at the economic calendar, we have red and orange folder news from Tuesday all the way down to Friday. Obviously, as my analysis, and for those of you guys that have been with me for a while here, what the data says, I don't care about. I just expect the heightened volatility around those sessions that then we like to work with as traders. So I will expect a larger range this week, but that will be confirmed in the price action, depending on whether we trade and expand away from the new week opening gap, or if we consolidate around it. That would be indication that we're likely in for another consolidation. However, I am not favoring that. I will be favoring an expansion week higher. So on the upside, I've shared what would invalidate a bearish bias for me, and that is trading below this volume imbalance. I will have to reassess. However, I am favoring higher prices. So we also have a volume imbalance here. Let me make this green. Volume imbalance above market price, as well as the buy side liquidity. So I will be favoring expansion into these key levels on a weekly, as long as we remain above these key levels, and we do see acceleration lower on dollar. So now dropping down into a daily chart. So buy side liquidity here, same level as on the weekly. So let me take this weekly level off. So what is interesting is that we have managed to close above this key fair value gap that we've been trading within. So the bodies have been respecting it, and we have this down close candle here, which is our bullish order block. So as long as we remain above this fair value gap here, SIBI, and this bullish order block, I will anticipate higher prices. What would invalidate my bullish stance on ES is if dollar rallies higher and we trade below these key levels. Since we've already returned to this breaker here several times that I took our attention to, once, twice, 3 times, I would not expect a return to this breaker, as that would be problematic for higher prices. So I would expect this fair value gap and order block to support price higher into these relative equal highs. Buy side. So one thing I want to mention before I go into my targets and expectations for the coming week, let's note this volume imbalance here on a daily chart. So right here we see we traded up into it on Tuesday. We took out previous week's high, but then none of the bodies were able to mount a rally or a close above consequent encroachment. So we rallied, but then it was an anemic run lower. Bodies respected this key level, swing high on the daily, and then we attacked our discount objectives, which were this fair value gap and bullish order block. So we have been just trading inside of this range this week. And as I said, I am expecting expansion higher. So if we are to remain bullish, we should find support in discount arrays, and price should rally through premium arrays and have no issue expanding through them. So I will expect higher prices. We now have relative equal highs here on a daily chart. And then ultimately, I am expecting this external range liquidity here to be traded too. What would invalidate my bullish stance is if dollar somehow mounts a rally, and then we trade into these premium arrays, and then we get weak and trade lower. However, I am not favoring that. I will be looking for higher prices. So dropping down into an hourly chart now. Opened up the last week here, pretty much consolidation week, in line across all assets. So we are trading within this dealing range here from discount to premium, and just pretty much consolidated around equilibrium. making for not that high a probability trading. So I would not want to see this dealing range low violated if we are to remain higher. We can take out previous week's low and then immediately snap higher, but we should not see any acceleration or speed to the downside through this blue box, which is our daily fair value gap. Support should be found within here to then rally higher into previous week's high. Now let me share the upside objectives I have on this week. So let me take this Fibonacci. Okay. So first target on the upside would be previous week's high, then the high here from February 16th. And then assuming we expand aggressively through that, then I would expect the external range liquidity here at the 42.41 or 42.45 level to be hit on the upside, assuming dollar accelerates lower. So with that being said, and same thing goes for Euro. Take a look at that real quick. Still seeing bullish order flow. Price did find support inside of these down close candles, just as we did in the dollar index, except it's the inverse. So we found resistance inside the bearish order block. So on Euro, I will expect higher prices. Still, my target would be previous week's high. And then we have the bearish order block in here. But let's look on a weekly where it'll be more clear what I think we're expanding towards. We have a volume imbalance here. That is my ultimate draw on liquidity for the Euro, assuming dollar does show bearish order flow. So with that being said now, let's get into macros, how I use them in my analysis, and things I look for in my intraday trading. Okay, awesome. So let's get right into it. So there's two things I look for when I'm using macros. Before that, let's cover what is a macro. So a macro is a specific time in which a price run will begin, but something to keep in mind is that the price run does not need to be completed within this time window. We look for the inception of the move to begin within these macro times to then either do one of two things: reach a higher time frame objective or run on profitable positions on from that day or week. So this is our checklist for macros. Does price still need to reach a higher time frame objective? If yes, then the macro will create the setup and deliver us to said objective. If the market has already reached a higher time frame objective, it will roll against those that have been making money. So you want to determine which direction has been profitable. Have buyers been making money or sellers been making money? So then we would expect the market to run against those profitable positions, forcing them to cover. So now let's look at some examples from hindsight data, and then we'll get into a live example here. So first question, has the higher time frame objective been taken? So here we see yes, we have taken out the buy side liquidity, the previous day's high. So now we want to see who has been profitable. Long positions on a 4-hour, on a 15-minute, buyers have been profitable. So this is our macro window on a 1-minute time frame. So now that our checklist has been met to expect profitable positions to be rolled against, we now want to look for some sort of setup to form to attack the sell stops from those buyers. So here we see in the macro, we see price delivers higher above the buy side liquidity. Very textbook 2022 model, buy side taken, displacement lower, market structure shift, return to fair value gap. Where would we expect? All these sell side liquidity pools here have trailed stop losses. So we'll expect the market to deliver to those levels and allow the people that shorted here to then be counterparty to the sell stops that reside below these swing lows. And then where do we deliver to? Discount inefficiency and the sell side here with a beautiful delivery. So now let's go into another example. So looking at this range we're trading in, do any higher time frame objectives need to be met? No. Some context behind this is it's a Friday within a consolidation week, so we likely have to work with internal range liquidity. What is internal range liquidity? Well, we need to look at the parent dealing range we're trading within, and then we're going to look to attack liquidity pools that reside within that range. So as I've said, no higher time frame objectives need to be met. So we want to see, okay, who has been profitable? So from this day, it has been a lower day. We've delivered to a discount from a premium. So shorts have been profitable. So short positions will likely be rolled against in this last hour macro. So now let's take our attention to this 5-minute chart here. Where would those buy stops be trailed from short positions that did not cover in discount? Well, there's a swing high here, 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 and then we have those relative equal highs here on the 5-minute. And then we also have a premium inefficiency here. That is just a bonus. So macro window forms within here. This is when we expect the inception of the setup to begin. We then see price drops into a discount. We see a key SMT with a Dow within a specific time window where we're already expecting higher prices. So for SMT, one of the key things to remember with that is alone, it doesn't mean anything. However, in conjunction with the framework or bias you're already looking to work within, it can be great confirmation to allow you to execute whatever you're looking to do with confidence, because the SMT is the algorithm tipping its hand to informed market participants that it's time to get to work. So looking at the macro here, we see this is when we expect our inception of the move to begin. Balanced price range, fair value gap, another fair value gap, we trade below it. We see price find support, and then we have a bullish order block. So one of the key things about seeing the bodies respect this is now we see bullish order flow. So now we have our drawn liquidity identified. So now we want to get in line with order flow to deliver to our objectives. So balanced price range, bearish order block, and it delivers beautifully right into the buy stops of this session. So now let's look at an example of price delivering to a higher time frame objective. So here, this blue box here is a daily fair value gap that we are expecting to be delivered as we are in a bearish context on the daily chart. So this video isn't about higher time frame daily bias. We're already assuming our bias is bearish and we're expecting discount arrays to be delivered. So now how do we use macros within a context to get on board with the move we're already anticipating? So looking here at our macro window, looking at the time here, we see 9:50 is about here and 10:10 is about here. So right here is our AM session macro. So this is where we would anticipate the inception of the move to begin. So we see here buy side liquidity is taken above the 8:30 opening price. So if we are trading the New York AM session, we would expect some sort of manipulation above that 8:30 price so that we can get a position on at an attractive level for the expansion move that we are anticipating. So then within this macro window here, we see buy side taken, we see a displacement lower, and then we see price trade into this fair value gap here and bearish breaker. Swing low taken out, so we have our market structure shift. So now 2022 model, buy side taken, displacement lower, return to fair value gap. So why would we expect this fair value gap here to be a breakaway fair value gap? Because there's a breaker. So the breaker will hold price within it and not allow it to trade higher. So then we see price expands lower, where to specifically our higher time frame objective. So in this example here, we see a higher time frame objective still has yet to be met. We are in an expansion trending model, so we would expect delivery into our higher time frame objectives, and the macro is where the inception of that move begins. Going into our last example here, let's take our attention to the top left here on the daily chart. So what these two lines here are is this daily fair value gap inefficiency, and we have this volume imbalance here, which is a new week opening gap from several weeks back. As we know, we want to extend these through 5 weeks forward to use them for our analysis. So here we see we still have a higher time frame objective that still has yet to be met. So we want to go through our checklist. Higher time frame objective been delivered? No. So the macro will set up the move to deliver it. Now let's take our attention to the 5-minute. So order flow is bullish. We're seeing displacement through the highs, and we're seeing lack of displacement through the lows, indicating order flow is bullish. So now we want to look to align time with price. Time is always going to be the most essential element to our trade setups. So now that we see price, or we have a key level that we want to see price deliver to, we want to wait for time to get in alignment. So here's our PM session macro. We see our displacement higher, trading into the high end of this fair value gap, institutional order flow entry drill. 2 down close candles, displaced through them. If you guys check out my video on order blocks, you will see why this is an order block that you could have got long in. It meets the criteria: swing high, displace through, break of structure, and a fair value gap. So this would be a valid long within the macro session that we are already expecting to deliver into our premium objectives. So this is how you can use macros in your analysis and in your trading. So enough with the hindsight. Let's get right into a live example that I executed on this week. Okay, so just for some context before we get started here on the video of how I managed the trade and why I did the way I did. So it was already a sloppy week, so I'm having to be extremely nimble with intraday surgical strikes. You don't want to overstay your welcome, and you need to be very careful with how you pick your shots. So let's do a quick rundown on what I was seeing. So here we see on a 15-minute chart, we've taken out sell side multiple times without any displacement. So that is already indicating to me that sell side has now been ran out in a discount. So now I want to see, do we have willingness to want to deliver higher into a premium? So what would be a level within a premium I would look for? So just visualizing the dealing range from this swing high here to this low, about here would be our equilibrium. What lies above that? We have a premium inefficiency. So I'm already having in mind that I want to see price deliver to these levels. Now taking our attention to a 5-minute chart, we start seeing bullish order flow. We start seeing down close candles being supported by price. So now order flow is in line with my drawn liquidity, but price isn't enough. We need time to be in alignment. So where are we at here? We are within our 950 to 1010, which is where we look for the inception of moves to begin. So now you guys are going to see me execute live on the concepts and logic that I teach you guys week in and week out. Or not teach, that I share, that I use and expound on in my trading. One thing I want to share with you guys is that I'm not here to teach ICT's concepts. If you want to learn from ICT and these concepts, I would recommend you go to him. I'm just sharing how I use these concepts in my trading and how I found my way and success within these concepts. So without any further ado, let's get right into it. So here we see a dealing range on the 1 minute. We've purged sell side and then we've displaced higher, and then we've now retraded down into a discount. We did have news at 10 o'clock, so I allowed the news driver to hit the market within this macro window, and I'm already anticipating higher prices because of what I shared on the 15 and 5 minute. So now I'm looking for the 1 minute to give me that confirmation I'm looking for so that I can get in line with what I'm already expecting on the higher time frames. So we see here, we took out sell stops in a discount. What's notable about that is, remember, one of the concepts that I frequently teach is lack of displacement. We see we take out this low, but do we accelerate below it with speed, aggression, and inefficiencies? No, it's a very anemic run. We then reject it and displace higher. So why didn't I enter on this small fair value gap in here? Personally, I wanted to see confirmation for bullish order flow. The reason I started this video with the context of the backdrop of the week that we're trading within, we're already in a daily consolidation, very sloppy environment. So this is how I manage my trade accordingly within that context. So we see here shift in market structure, displacement, and then we have a bullish order block in here. So where was my entry? My first entry was on this candle here as we traded through the opening price of this order block. So this is another entry model I have. I do not need to see price trade above and then drop back down into the order block. As long as I know where the market's going, I have several entry techniques to get me into the market. You could say, well, this is chasing price because you're buying in an up close candle. As long as we're still within that discount array, I'm confident that I'm still getting a high probability long entry. So my first entry is on the expansion higher through this fair value, or through this order block that already found support inside this fair value gap. So now I see bullish order flow is in alignment with my drawn liquidity. So we've traded down here into this 5 minute order block, the consecutive down close candles here, and then we see the reaction I'm expecting. So I get my entry within this bullish order block in here. First partial already outlined. You always want to have your entries, exits, stop loss all mapped out before the trade, before you even enter. So then I highlight here that this is institutional order flow entry drill. As we're trading into this low, I'm pyramiding and adding to my position. So now I'm long 2 E-mini contracts, pyramiding inside the fair value gap and the order block, expecting this 15-minute inefficiency to be delivered to, that I will highlight now. So as I've highlighted with the SMT, the ES failed to make a lower low, whereas the Dow did. So now I have that algorithmic confirmation behind me that we are likely to be seeing higher prices, as the S&P was clearly under accumulation, as the SMT told me. So mapping out my stop loss below the swing low, not in any hurry to raise it up because we haven't ran into new buy side yet. So I do not want to have my stop loss close to the position. I don't want to suffocate it and be worried about it. So now that we've ran into buy side, there's my first partial. Second objective is the fair value gap. As I've said, I'm managing the position the way I am because of the conditions. So I want real low hanging fruit objectives. I want to get in, get my money, and get out. So now my stop loss is better than break even because we have ran into new buy side liquidity taking out this high. So now we should not trade below this key order block if we are to remain bullish and trade into here. So that's why now I'm confident raising my stop loss here. So stop loss better than break even, free look. So I am expecting this fair value gap to be delivered to, but what are further confirmations that I look for to confirm that? I want to measure the Judas swing, the manipulation move down before the real move. So then I'll get fib extensions. And what I want to see is confluences lining up inside of the key levels I'm already looking for, so that I can have further confirmation that these are targets that I want to take partials at. And then here we see this lines up perfectly. So as I am trading, I do have the NASDAQ and the dollar index open on my other monitors. So I am seeing dollar expand lower, as I believe I'll show in this recording. And we are seeing a symmetrical market, NASDAQ and Dow trading higher. So I was confident to enter this position. So as we see here, dollar showing bearish order flow, allowing for a nice low resistance liquidity run into the buy side. So here I'm just measuring the dealing range so you guys can visualize the premium, the discount that I'm looking to target. So we want to distribute our longs in a premium. So if I'm accumulating shorts inside this discount range, why is this discount? Because I'm measuring the range we're trading within. If we accumulate longs in discount, where do we want to look to distribute them? In premium market. So as I've said, real low hanging fruit objectives given the overall climate and conditions we're trading in. So I want to look to distribute these long positions at the first premium objectives that we get to. So bullish order block, I'm indicating how I'm managing the position. So if we get a body close below this bullish order block, that's reason for me to save the stop loss and close the trade in profit. But we see here it delivers right down to the opening price beautifully, and I'm okay with that. Why? Because my stop loss is well out of striking distance. I'm not suffocating the position and stressing out about my stop loss. We're still seeing bullish order flow here on a 5-minute, 15-minute chart. So what I'm saying now is I want to see it expand aggressively now. Why is that? Because we've already ran in the new buy side. Time of day, we're within a key level, so price should not get lethargic. So within these sloppy environments on higher time frames, I'm very demanding of price to show me that it either wants to work for me and run to my objectives, or I'm looking to cut bait to preserve my mental capital and also prevent deep retracements, because that's something we see in high resistance liquidity run environments, and that's what we've been seeing a lot of. So we need to trade accordingly and manage our positions in that way. So here I'm pulling up the NASDAQ. One thing that's problematic is that we are seeing that the NASDAQ has an SMT. So what I'm saying right now is, for me to remain in this position, NASDAQ needs to snap higher and erase the SMT here at the highs. Because the fact that we're seeing an SMT after running out buy side is something I don't want to see. And then, as I've mentioned, I'm much more demanding of price action to show me it wants to work for me within these sloppy conditions. So as soon as I see price beginning to expand lower here, I close out my position well in profit, because we could likely see a deeper retracement. We are seeing the SMT, so I'm looking to abort the trade and move on to the next opportunity. As soon as price shows me problematic signatures, especially in these environments, I'm not going to mess around with it, and I'm going to cut bait and look for new opportunities as they present themselves. And then, interesting thing, it actually did end up hitting the order block once more beautifully, and then it actually did deliver to the objectives. Was I upset that, okay, I missed on a few more handles of profit? Absolutely not. If you're banking trades and making profits, taking partials in these environments, that's all you can ask for. So I wasn't upset that, oh man, I didn't get my last partial, because I followed my rules, followed my trading plan, profited, nothing wrong with that, and then I closed out in profit. So that's how I manage these trades within these conditions, and that's also how I use macros in conjunction with my technical analysis to ensure high probability trading in line with algorithmic price action. So I hope that video was helpful to you all. Feedback would be greatly appreciated. So with that being said, I will now get to any questions that we have. I was receiving a lot of questions regarding macros and that, so I wanted to do a detailed video on some previous examples, but also show you guys some real-time execution on that right edge of the chart. Hey David, glad it was helpful, brother. Tommy, appreciate it, my man. Hey, Jonathan Velasquez, the bearish OB on the daily, 50% of wick to wick. Body, okay, so for when I'm measuring order blocks, I measure from the high end to the low end. I don't measure body to body. I measure from wick to wick to get my mean threshold for the order block level. Ghost, RTH is the regular trading hours gap. So let me show you guys what that looks like and how you can use it in your analysis. So with the regular trading hours gap, let's go into a 15-minute chart. So regular trading hours gap is the gap between where we close at, I believe, 4:10 the previous trading day and where we open at 9:30. This is because this is when the stock exchange closes. So this is regular trading hours, whereas when we see futures trade overnight, that's the electronic trading hours. So how can you use this in your analysis? I use it to give me a soft bias. So in weeks when we're already not expecting a lot of movement, we expect price to return to fair value. What is fair value? Inefficiencies and where we closed the day before. So the market will look to seek these levels, and let's look at how that delivered this previous week in a consolidation profile. So looking at Monday's trading, we closed here at 4 o'clock and we opened here. Dive right down into the regular trading hours gap and fill that in beautifully. Then where do we trade back up to? The regular trading hours close in here and we just consolidate. Let's look at Tuesday's trading. Close here on Tuesday, open here on Wednesday, deliver and fill in this gap beautifully. So whenever you guys see RTH gap on my charts, that's what I'm referring to. Now going into Thursday's trading, we see the closure here on Wednesday. And let me highlight that so you guys can visualize that. And then let me show the other days here. So closing here, and then open here, fill that in beautifully, closing here, opening up here, we fill that in, and then looking at Thursday's trading, we close here, open here. Where do we fill? The regular trading hours gap. So we see price trades into the high end of that, and then we trade off it. Friday, there was no real gap that was created, but within a consolidation profile, we're not expecting the market to expand lower. So what will it refer to? What it considers fair value. Fair value is the new week opening gap and regular trading hours gap. Hope that helps, Ghost. Denisha, trade breakdown is really well done. Helped out as always. Thank you very much. I'm going to continue incorporating more of these into the analysis. I remember that you said it was very helpful. You gave me a lot of feedback on that. So that's something I'll definitely continue to incorporate moving forward. The chart father, beautiful delivery as always. Appreciate it, brother. Olawale, incredible insights. Much appreciated. Thank you, brother. Alistair, excellent teacher / coach. People just need to learn the terminology. Absolutely. So as I've said, I'm not here to teach or rebrand ICT's concepts. I'm just sharing how I use them and how I found my way with them. If you do want to learn the language and understand the concepts and the language ICT's created to bridge what the algorithm's doing to what he's allowed to teach, I would recommend you go to his core content and his YouTube channel at Inner Circle Trader, and there you'll find everything you need. Lo-Fi Jang, always bringing the fire. Appreciate that, my man. Ghost, this is a diamond, not a gem. Thank you. George K, can you explain a little more on how I can identify the order block after the displacement? So what I would recommend you do is go ahead and check out the video I did. I did a detailed analysis on order blocks. I gave a bullish, bearish example, how to qualify the order block, and how you use it in your analysis. So check that one out, and if you still have any questions, I'll definitely clarify for you next Sunday. David, how did you learn to speak so eloquently, sir? Reading books. What are the macro times for S&P, Forex, EU? So I personally don't know much about Forex macro times. I'm not going to speak on something I'm not real familiar with. We do have quite a few Forex traders in our chat. So we have a pretty cool community on Telegram. Everyone's kind and respectful. So if you want to head over there, I would direct you there and ask some of our Forex traders what they use their macro times for and when they implement it. I personally can't speak on that as I haven't spent the hours backtesting that asset. So with that being said, let me check the Telegram chat real quick. Alistair, do I have a video on institutional order flow entry drill and the breaker block relationship? No, I do not. But as I've highlighted, I've covered it a couple times. Whenever there's a breaker, I would not expect the breaker to be violated and the higher fair value gap to be traded to. It can in some examples, but I personally expect price to be held within the breaker. And from my experience and backtesting, I usually see that the breaker is what holds price. Momentum Trader, sorry, did you say you have a video on breakers soon? I don't have a video specifically on breakers, but I do have a video regarding my A+ trading model, the highest probability model that I have that I look to trade, and I do have a video on that and how I incorporate breakers into that. So Olawale, happy Sunday. Thanks for sharing your knowledge and elevating the community. At some point, we'd love to hear TradingView best practices that have related to marking up the charts at all the different time frames, but still keeping them clean and relevant for the trades you take, i.e. tips on using the object tree, object visibility, alerts, etc. Not a technical subject, more around organization. Yeah, so I'll touch on that real quick and how I do that, because when you guys first start learning ICT, you want to put all the PD arrays top down on your chart, and it can become a nightmare real quickly. So what are some things I do to help with that? One, I have multiple templates. So I have a template for new week opening gaps. I have a template for new day opening gaps so that I can refer to those before the session and I can see what key levels I want to work with. So that's what I do, number one. Number two, I also have a notepad with me. So my daily, weekly key levels, I have those written down on a notepad so that I can refer to them as I'm trading, but not have a crowded chart. Whenever I'm sending annotations or markups, I put everything on there so you guys can visually see what I'm referring to, what PD arrays, and how price is relating to those levels in terms of measuring order flow and bias, narrative, and whatnot. But having a notepad is really helpful. So your daily levels, weekly levels, and even hourly levels, fair value gaps, breakers, order blocks, the whole 9 yards, you can have that on a notepad and just refer to those key levels as you're trading. And that's a very helpful way to declutter your charts. So those are some two things that I use to help with my organization on the charts so that it doesn't get overly crowded in the trading session. Soren C, hello, I would like you to explain how we could analyze if we have a trend day or consolidation day. Thank you, and I will follow you with great pleasure. Thank you very much for checking out our videos and spending time with us. I appreciate it. So yeah, let me go into how you can anticipate consolidation days. The first thing that you do is look at the economic calendar. Before I even start trading, well, before the trading week, I already know what the economic calendar entails, but before the trading day, I always refer back to it again just to see in case, sometimes Fed speakers are added, stuff like that. So you never want to be caught off guard with that, as price can rip against you aggressively if you're not abreast as to what the economic calendar is saying. So as far as consolidation days, if there's no news, it's not likely to be a big range day. So the first thing you want to look at is news. The second thing you want to look at is the higher time frame market profile. So looking at this previous week, we've pretty much been banging around in this range from this low to this high. So what I shared, I think I shared this with my private clients, but so as long as we stay within this small range and fail to displace out of it, we will remain in consolidation. So how can you expect consolidation days in the lower time frames? Looking at the higher time frame. Nothing about this gives me confidence in high probability expansion continuation setups. So as I've said, you need to be very surgical intraday scalps, and looking at the higher time frame, you can determine if we are likely to remain in consolidation or expand. So higher time frame, consolidation, not likely to expand out of it aggressively. So I would anticipate consolidation in the lower time frames. And then the third thing that you can look at is new week opening gaps. Are we constantly referring to the new week opening gap? That is indication that we are likely to see a consolidation week. So let me highlight that for you all. So let's look at previous week's trading and look at electronic trading hours. So this is that overall daily consolidation. So first thing, higher time frame. Are we consolidating on a daily? Are we range bound? That's the first thing. Second thing, look at the economic calendar. Do we have any high impact or medium impact news drivers? And then the third thing you want to look at is the new week opening gap. You see how this previous week's new week opening gap, we refer to it once, twice, 3 times, 4 times, 5 times, multiple times throughout the week. We're constantly referring to this new week opening gap. So this indicates to me that we're likely going to remain in a consolidation range bound trading profile. So as we see here, dealing range from high to low, we pretty much just consolidated within this range, taking out sell side or buy side, sell side, buy side, sell side, and just banged around in this range. So those are the 3 things I look for in my technical analysis to determine whether or not we're likely to be range bound or expect expansion higher. Walter, I would like to have an explanation of your trading plan, meaning your checklist before executing a trade, if possible, with an example. So I just gave an example of a live trade that I used and some confirmations I look for. That's a great idea, and I'll note that for future reference. Maybe I will do a future video or explanation on my complete trading plan and how I look to execute confirmations I like to look for and see for my personal model. That's something I'll definitely look at moving forward, brother. Absolutely. Yes, Jonathan. Is the new week opening gap, new day opening gap indicator public? Yes. You can find it on indicators and then look up weekly opening gap, and it's by crypto night. One thing that the only reason I use it is just to bring them up real quick. I like to have my new week opening gaps done by hand because, as ICT mentions, not every new week opening gap is relevant. So I want to just have the ones that I'm using that are pertinent to my analysis for that session. As you can see, for example, here, let's say we put on the indicator. This is just way too much, and this can be a headache, especially if you don't know what you're looking for. So this is why I, ahead of the session, put on my chart which specific new week opening gaps I'll specifically be referring to, because it's not all of them. There's very specific ones that I look for in my trading and that I incorporate into my analysis. But to bring them up in a pinch, the new week, the indicator's very helpful, and it's been accurate from my personal experience. Olawale, that was helpful. Thank you for your response. Absolutely, man. I'm glad it was helpful. Anything for US 30? Matthew, yeah, let me go ahead and check out the Dow for you. So for the Dow, we've seen price has been much more bullish. Reason being is if we compare them on the higher time frames, let's look at NASDAQ and S&P. It's lagging behind significantly. If we see here, the NASDAQ already took out this external range liquidity here, being this high. So the NASDAQ delivered this 2 weeks ago, whereas the S&P and the Dow have failed to. This is why we've seen much more aggressive price action as it's trying to catch up to the other indexes, as it's been the lagging index. ICT refers to this as the six sister approach. Since it's been the weaker one, it's going to want to look to catch up and deliver more aggressively to those objectives. So as far as the Dow, same thing. Still seeing bullish order flow. We've traded down into a discount here, this discount fair value gap. And why is this a discount fair value gap? Looking at the dealing range from low to high, it's the first discount objective. Reaccumulates in there, bodies respect it beautifully. And then we see higher delivery into buy side. So we consolidated inside of this bullish breaker. You can use all these down close candles, but I'll just refine it within here. Make this blue. So we did reaccumulate within this breaker. We are finding support inside this level. So as long as we remain above this bullish breaker, I will expect buy side delivery into premium objectives, just like I'm expecting for the ES and the Dow, or the ES and the NASDAQ. So what I'll be interested to see moving forward is, does the Dow take out this external range liquidity, or do we see it fail and create some sort of SMT for lower prices later? And I am expecting longer term indexes to be bearish. However, that's something I'll cover. That's a longer term outlook. That's not as important right now. For right now, I'm expecting risk on, lower dollar, higher indexes. So for new day opening gap, you want to look at the close futures markets have a close between 5 o'clock to 6 o'clock, and within that closing time, you want to extend that gap. So that's the new day opening gap. For new week opening gap, you want to look at Friday's close and Sunday's opening price. So the difference between the close on Friday, open on Sunday, that would be the new week opening gap. Matthew, absolutely, man. Glad it was helpful. All right, awesome. So I think we'll conclude with that. So thank you all very much for sharing your time with us, for all your great questions. I appreciate you guys sharing your time with us. So with that being said, we'll be sure to send updates in the Telegram as with respect to what we're seeing for the week in terms of bias analysis and important things that we'll be monitoring. So with that being said, I hope you guys all have a great trading week. And I look forward to speaking with you all in the chat and seeing you guys next Sunday. Thank you very much. And you guys have a great rest of your week. Take care, Denisha. Ghost, thank you, brother. All right, signing off. Have a great week, everyone.